now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger.
Let's try this again. Let's try this again. Da-na-na-na-na-na. Hey guys, what's going on? Jeb here, and in today's video, we have sound. Let's go ahead and turn that back on. Apologies for the technical difficulties. Over the last 24 hours, we have seen the United States federal government shutdown come to a conclusion, which is interesting because the impact on the chart has not been what we were expecting. We were expecting that we were going to see a rally on Bitcoin because that's what we've seen in history whenever the United States federal government has reopened. When the United States federal government reopens, generally speaking, we anticipate that this would be a bullish catalyst for Bitcoin. However, the fact of the matter is, last night at about 7:30, we saw the United States House of Representatives vote and pass the funding bill through January the 30th, and then that immediately went off to President Donald Trump's desk where that was signed into law. So the United States federal government is reopened, meaning that air traffic controllers, military, all kinds of government programs are now turned back online, and yet we do not see the kind of rally going on Bitcoin that we anticipated. This is a very important development that we're going to be discussing in today's video. And quite frankly, to kind of give you the thesis of today's video, it actually builds the case that Bitcoin might be about to drop back below 100,000, or at least down to and attempting a test on 100,000. So let's go ahead and dive right on into it. Appreciate the patience there. Apologies that we were not having audio. We got that fixed right away. Thank you guys for being here. Sean O'Brien is in chat. Pew Pew Poom 2 is in chat. Luis is in chat. Ryan Foshhog is in chat. Christopher Ryans, Luigi, Cole Hebert, Angela W. It's Remy No Limit. Good to see you, man. Spoopy is in chat. It's pretty spoopy out here. Angela W. is in chat. Lena, Brecht. Man, all of you guys just have no sound. You guys might want to get your hearing checked. I'm just kidding. I'm just joking. I'm not going to gaslight you today. Happy Thursday, Jeb and fam. Good morning. Told you, bro. Bitcoin doesn't need government. Sell the news. Yeah, it did. We sold the news. You're absolutely right. We did. Let's get started. We got a lot to cover. There's so much analysis on this chart that we're just gonna we're gonna do the thing. We're gonna do the thing. Oh man, that was 191 drawings. Like, hang on a second. I'm gonna move. Whoa, I'm going over here. Watch this. 191 drawings. Man, I don't know about you, but it feels kind of good to clean up the chart every once in a while. Let's start fresh. I love a fresh chart. It's a clean slate for us to do some analysis on, and it's so important that we do this sometimes because we need to make sure that we're getting proper perspective. A few things jump out at me here, even before we get into the short-term technical analysis. The first thing that jumps out at me here is that is a very steep downtrend. It's a very steep downtrend that Bitcoin finds itself under. It's not a perfect downtrend as far as we haven't actually rallied up to and touched it, but honestly, that just kind of gives you more bearish confidence, right? As you will remember, we have still remained ever since Sunday, October the 12th, under our prediction of $94,000 to $100,000. I have not yet called that theory completed because Bitcoin has not confirmed a new uptrend. I have not announced a new prediction on where Bitcoin is going because I have not been able to fully rule out a drop down to 94,000. That is intentional. It is intentional that I have not ruled out a $94,000 Bitcoin. And the reason that I have not ruled that out is because Bitcoin has needed to show me some strength that it has not managed to do just yet. Now, something else I want to point out. There is also this downtrend. As you can see, Bitcoin finds itself in this falling wedge. I think at some point, this falling wedge is going to break bullish moving into the beginning of 2025. Our thesis for the last month now, literally over a month now, has been that Bitcoin was going to drop down to $94,000 to $100,000. It was going to bounce and have a bullish Q1 of 2025. Whether we're right or whether we're wrong, that's been our thesis ever since back here. This is what the chart looked like when we said that. It was the Monday after the 10-10 crash, which happened on a Friday. That has been our thesis ever since. And we've watched Bitcoin grind all the way down to $100,000 exactly as we predicted. And I have not yet called $94,000 to $100,000 as being completed. Now, obviously, we have been vindicated. That has come to pass. But I've not said that we're done with that movement just yet. And the reason very simply is because Bitcoin could fall lower from here. Okay, a couple of other things I want to point out. Historically, on the Bitcoin chart, we have seen Bitcoin generally hold this uptrend. This is on the linear chart. And depending on how you draw it, I'm going to draw it right here. Depending on how you draw it, it gives us support right down here around $94,000. As you can see, this falling wedge is pointing towards, you guessed it, $94,000. This is a big part of the reason that we've been calling for, as I will say again, $94,000 to $100,000. I also said that if Bitcoin drops below $100,000, it will likely be for less than 7 days and you'll have a very strong bounce. We have spent about 3 hours below $100,000. So according to that prediction, we could still see another 6.5 days of trading down below $100,000 in what would basically amount to a wick below 100K out here on the weekly chart. This would be max pain for everyone, because what this would mean is that we would break through the 50 weekly moving average, which is currently in the process of failing. And if we bounced at 94 and rallied, then that would mean that all of the 50 weekly moving average believers would be completely knocked out because they would be preparing for a bear market going into major shorts. You'd have a giant short liquidity event up here at 105 and Bitcoin would probably bounce straight through it. And so what I am looking at right now is that Bitcoin is not giving me the kind of confidence that I need. We took 2 trades here. We took a trade right here, rode it all the way up, didn't quite hit our target, dropped. We took a trade right here, rode it all the way up, didn't quite hit our target, dropped. In hindsight, I definitely should have taken profit a little bit sooner than I did, but you also want to let those winning trades run. We got perfect entries. We entered on the bottom of both of these trades, on the bottom of both of these legs perfectly. We just didn't take the exit as soon as we should. But the reason that we didn't take the exit was because we're assuming that we're in a bull market. We're assuming, and this is really one of the key elements of what we're going to discuss today, we are assuming that bullish news will produce bullish charts. Why are we assuming that? Because theoretically, we're in a bull market. But it is extremely, extremely telling that when the government reopened, Bitcoin crashed. It's very telling. It's very, very telling. Because in bull markets, bullish news is supposed to push us to the upside, and bearish news has little effect. In a bear market, bullish news has little effect, and bearish news pushes us to the downside. Because when you're in a bull market, the majority of the market have their bullish tinted glasses on, and so they don't really see the bad news, they only see the good news. In a bear market, you've got your bearish tinted glasses on. You don't really see the good news, You only see the bad news. And so we can ascertain which pair of glasses the market is wearing based on the way the market responds to different news. The fact that last night we watched the government reopen, which happened right around in this area, and immediately dumped down to 101, had a pump up to 104, and then fell right back over. That is not the kind of bullish response that we are hoping for. One of the last time that we saw a government shutdown of this length end was in 2019. It was right back over here. It was in January of 2019. It was right over here. Relatively soon, Bitcoin went through a 400% rally. Now, it's possible that Bitcoin's going to go through a massive rally in like 2 minutes, in like 2 days, 2, 3, 4 days. And the government shutdown ending is going to have that impact. But in the short term, you can see that it theoretically had some bullishness that immediately fell over. In other words, the bearish impact on the chart is stronger than the bullish impact from the good news. And so that has to make us take a pause. Now, I am not saying that we're in a bear market. I'm not even saying that if we close below the 50 that we're in a bear market. A lot of people are putting a great deal of stock in the 50 moving average, and if we drop below that, bear market's over. I don't think that's necessarily the case. I think that Bitcoin can maintain market structure on this linear chart uptrend, and I think that it can maintain market structure by dropping back down to the 0.618 Fibonacci level, which would be at $94,000. It could drop back down to 0.618 and bounce and rally. Because historically, markets don't necessarily have to break through the... it's not necessarily governed by the trend lines. It's more so governed by the Fibonacci. So, for example, here, on this rally, the Fibonacci level was at $75,000. And that $75,000 also had technical confluence with the previous all-time high at $75,000. In our current market, you can see, and that's the 0.618, which is exactly where Bitcoin bottomed at, the 0.618, if you'll recall. Back over here, we called for Bitcoin to go to 75,000. I called you. If you ever want to know, here, by the way, I'm going to completely expose myself, for better or for worse. If you ever want to know whether Jeb called something, or whether anybody called something, here's how you do it. Did crypto Jeb call for 75K Bitcoin in 2025? Grok will search the entire internet, and it'll try and find it. Now, sometimes it'll find something, and sometimes it won't. Yes, Crypto Jeb, the Bitcoin analyst and ex-user, did predict Bitcoin reaching $75,000 in 2025. In May 2024, video analysis identified an inverse head and shoulders pattern pointing up towards 75,000. So it will actually give you the calls. You can go back and find it. We called for, and you might have to dig around a little bit. I think it's finding something else there. But we called for Bitcoin to drop back down to the 0.618 because Fibonacci's govern the market. This market is thoroughly driven by technical analysis. This is the most technical bull market I have ever seen in my life. It is this just perfect, beautiful stair step to the upside. It's gorgeous. And yet we don't want to listen to technical analysis. This is why our channel's been doing so well. Technical analysis shines. Now back over here, Bitcoin didn't have to drop back down to the 0.618, partially because you saw the ETFs come online here, and also partially because Bitcoin took its correction in time. Now remember, we've talked about this. There are two ways that Bitcoin after a rally can take its correction. It can take it in space or it can take it in time. You can correct by like this, or you can correct like that, but both of them give you the correction that you need. So Bitcoin spent a lot more time trading sideways here, so it only had to go back down to the 0.382, which is why I didn't have to go down to the 0.618. But over here, Bitcoin exploded, and it didn't trade sideways. It didn't correct through time. It corrected through space, and we dropped back down to the 0.618. Our current bull market, our current rally that we've seen since the bottom in March has seen a much more aggressive pullback. We only hit all-time high like a month ago. We're not 8 months out from the all-time high like we were over here in September when we hit the all-time high in March, or 6 months, whatever. So Bitcoin is taking its correction in space, which means that it's going to dig deeper. It's going to dig deeper. So I believe very firmly that Bitcoin can drop back down to $94,000, bounce, and maintain its market structure, just completely obliterate everybody who said that Bitcoin dropping below 50,000, the 50 weekly moving average, would send us into a bear market. And then from that point in time, bounce and rally. That would not surprise me at all. I mean, think about it. This market, we corrected sideways for 7 months. This market, we dropped 32%. Does it really make sense that this major market correction would only last 35 days and only go 20%? It doesn't actually make sense that the bears are exhausted yet. And that is why I have not put a great deal of stock or worry into breaking below the 50 weekly moving average. Now, I know that I'm going against a lot of my colleagues in analysis. For example, Ben Cohen has talked a lot about the necessity to hold the 50 weekly moving average. And I will say that breaking below it will have a mass psychological impact that could trigger a bear market. Breaking below the 50 because of its positioning could send us lower than 94. And if we start going below 94, that's where I am calling for a bear market. This has been our firm position for the last several months. If Bitcoin cannot hold above $94,000, then Bitcoin will most likely go into a bear market, and we've discussed at length what that bear market would look like. It would likely be a bear market down to approximately $55,000 to $75,000 somewhere in Q3 to Q4 of next year. That is what we would anticipate a bear market looking like. It would look like it would have a target something like this. This is where I would expect Bitcoin to drop back down to if we did in fact go into a bear market, and from that point in time we would probably resume the bull market, as quite frankly the Trump family would probably try to manipulate the living hell out of it because of the midterms. Trump, who has put a lot of stock in the cryptocurrency space, which is kind of a funny thing. He's put a lot of crypto in the cryptocurrency space, I guess I should say, is not going to want to see Bitcoin performing like absolute horse crap moving into the midterms. So if Bitcoin does go into a bear market, this would be a traditional 4-year halving cycle prediction. I would actually probably more so move this prediction up in accordance with many of my colleagues over at some of the exchanges who are of the opinion that if we go into a bear market, it's probably going to look something more like this. Maybe a bearish Q4, moving into a bearish Q1, and then a much higher bounce and a much sooner bounce because of the overall strength of the market. Something you have to understand is that Bitcoin is having seemingly having a bit of a magnetic pull down here towards $94,000 and even the CME futures gap. Because remember, it's not just a CME futures gap. There's also a gargantuan fair value gap right here, right? It's a massive fair value gap between the top of this wick and the bottom of that wick right there. And as we know from our trading, typically Bitcoin will fall into the middle of that fair value gap. That'd be a drop down to $90,000. Now, I probably wouldn't stay there for long, but at this point in time, with Bitcoin rejecting, instead of rallying on the news of the government opening, I have to continue to double down on our call that we are still, at this point in time, looking for a drop back down to the 0.618, which would be $94,000. Now, I know that's not going to be something that a lot of you guys want to hear, but it's what makes technical sense. A drop down to the $94,000 would make sense. And by the way, one thing else I ought to point out. Every single one of these market corrections so far in this market have been governed by a downtrend. And that downtrend has led the lows straight back to the bull market support uptrend, which is this, the bull market support uptrend right here. We've had a downtrend that's led us straight there, and at the intersection of the downtrend and the uptrend is where we found the market bottom. Boom, right there. See that? The market bottom happened here on a wick down to $50,000 on August the 5th of 2024 at the intersection of the correction downtrend and the bull market uptrend. When they intersected, that's where the bottom was. Same thing over here. We had this downtrend. This was a big part of the reason that we were able to call $75,000 as being a bottom. Once again, go watch the videos, go check our X. We talked about it extensively, and I can tell you for an absolute fact that we called $75,000 as the bottom because I was sitting on almost $200,000 worth of cash, and I started deploying it at $75,000 because that was our plan. Like this is, I put my money where my mouth is. We bought a buttload of Bitcoin down here. So the exact same thing is in play right now. We have this correction downtrend, and as you can see, it has not come in contact with this uptrend yet. It has not come in contact with this uptrend yet. And so for Bitcoin to drop down there, that means that the 0.5 level at 100,000 has to break to drop us back down to the 0.618. So at this point in time, unless Bitcoin can reclaim above the 0.382, which as you can see on that longer term Fibonacci is spot on. It fits the chart perfectly. Look at this. You see all of the trading around the 0.382 over here. Back tested to it here. Back tested here. Back tested here. Rejected off of it. Notice that. The 0.382, we just did an underside, overside rejection. We were using it as support, fell through it, just used it as resistance. This is absolutely critical. The market structure is screaming at you that this correction is not done. That's what it's screaming at you. So now what we need to see is whether 0.5 will hold, and if it doesn't, that's okay. Remember, this correction has only been going on for 35 days. It's been a very short correction. Grow up and quit complaining. It's really not that big of a deal. Bitcoin corrects for 6 months at a time sometimes, in the middle of a bull market. In a bear market, it might correct for 18 months. 1 month is not a big deal. No crying in the casino. If you want to make money in crypto, learn to be patient. Oh, but yeah, my portfolio down 20%. Stop. Like, seriously. Bitcoin is the hardest asset known to man. It's going to be fine. You need to quit your belly aching, and you need to look at the analysis. You need to ground yourself in logic, in rational thought. And the rational thought is, Bitcoin is coming down here, trying to hold each one of these fib levels, and it's very possible, in fact, very likely, that it's going to break through 0.5, back down to 0.618, which, as we have said over and over and over again, probably over 1,000 times on this channel, is at $94,000. Ever since the 1010 crash, we said that spooked investors to such a degree that we're probably going to have to go back down to the bull market support uptrend. That's what we said. Ever since 1010, we said this is probably going to be such a dramatic event that is going to take a few months for people to get back into the swing of things because they just lost so much freaking money. So, my official prediction, and I'm going to post it, and you're not going to like it. Bitcoin drops to 94K before December 15th. Bitcoin drops to 94,000 before December 15th. This is our prediction. Come on over to X. Feel free to go over there and bookmark it. If I'm right, I'm right. If I'm wrong, I'm wrong. But that's what the analysis is pointing at. And I simply, unless we see, let me go ahead and go ahead and just kind of spiff that up a little bit. Throw that on there. There we go. That's what I'm predicting. And so what we're going to see is that this is really going to freak people out. And there is a possibility. And notice, I didn't say and bounce. I could have said and bounce. I'm not saying that yet. I really need to see how Bitcoin interacts with 94,000 because Bitcoin just bounced off of $100,000. And when it bounced off of $100,000, it didn't give us a lot of confidence. You understand what I mean? Like, we didn't really bounce far. If we start dropping below $100,000 and spending a decent bit of time down below $100,000, it's really going to be kind of interesting to see how Bitcoin responds to that. It's going to be interesting to see how Bitcoin responds to that. I mean, people might just absolutely crap their pants and sell everything and run. And at that point, maybe 94 doesn't hold. Maybe we go into a bear market. But what I will say is this. Quite a few people are, quite a few of the exchanges that we talk to, because we have a lot of industry contacts. I mean, we know basically everybody in the industry. Most people in the industry, the insiders, because that's something I do, is if I have inside information, I tell you. I'm just going to tell you. I won't tell you the names of who said it, but I will tell you what I'm hearing, because we have our ear to the train tracks. I mean, we pay attention to this stuff. What we are expecting, and what the majority of industry insiders are expecting, is and I've posted about this. They're expecting a mini bear market, is what a lot of them are calling it. They're expecting a mini bear market, which worst case scenario brings us down to $75,000, which will fulfill the 4-year halving cycle prophecy, but it will not be anywhere near as deep as what people were expecting. And if that happens, great. I have no problem with that at all. You know what a lot of them are also predicting? Many businesses in the cryptocurrency space are also preparing for because you've got to understand, look, I mean, if it's not obvious, one of the ways that I stay in business and do this is we have advertisers. Duh. So I have inside information about what these advertisers are thinking. Not just the ones we have, but pretty much all of them. I mean, we talk to everybody, right? That's what I do, is I network in the industry. What most companies are doing right now is they are planning for a really crappy Q4 because people are anticipating the 4-year halving cycle bear market, and so the buying pressure is just not there. People don't want to buy at the end of the cycle. But when they realize that Bitcoin didn't just have the floor fall out from under it, many of them are planning for large-scale advertising campaigns in Q1. Advertisers don't spend ad dollars when they think we're going into a bear market because they stick the grain in the silo and they prepare for the winter. So, right now, I have run for over a month the very unpopular position because I tick off everybody with this prediction, which is probably part of the reason we've been right so far. We have run the very unpopular position that Bitcoin will drop down to $94,000 to $100,000 and bounce sometime before the end of the year. That's been our prediction. A drop down to 94 to 100 and a bounce with a bullish Q1. And it's very interesting. After I started saying that, a few weeks later, I start hearing from a bunch of industry insiders that that's what they think too. So, what I'm expecting is that, as usual, the insiders know something that you don't. As usual, they know something that we don't. They have all the information. They know everything. They have all of it. They know what's going on in the White House. They know what's going on Capitol Hill. They know what's going on in Congress. They know what's going on with the on-chain metrics. They know what's going on with with where all the orders are placed. They understand what the market makers are thinking. It's one of the reasons you listen to this channel is because I'm going to tell you what I am hearing. I've been in the industry for almost a decade, and I have a very, very, very good reputation because I've always maintained my integrity. People are willing to tell us what they think because they trust us, and I will never give out people's names on this channel. But what I will say is that I am not lying to you. This is exactly what I'm hearing. Many industry insiders are anticipating there to be some fear because of the end of the 4-year halving cycle. Correction in Q4, maybe below 100,000 for a little while. Shake out the weak hands. Our technical analysis lines up perfectly with that. A back test down to that bull market support uptrend would be very helpful. And then from that point in time, you see a bounce and you see a rally into Q4. That's what I'm expecting. That's what I'm expecting. All right. So let's go ahead and read some chat. I really appreciate all of you guys being here. Worst case scenario, I'm wrong. We triple bottom, quadruple bottom, quintuple bottom at 100K. I want to make a couple things very clear. Couple of takeaways, because there's no point in doing a bunch of technical analysis if we are not going to make sure that we have a application from it. The first application is unless something very seriously changes, I am pausing long trades because Bitcoin, while I don't think it's going into a massive bear market, it's acting a lot more like a bear market. So when you are trading, you need to figure out what market are you in, bull market, bear market, and you also need to figure out what is the daily bias. Is the market bullish today or is the market bearish today? That's why our last two trades didn't go full profit. They got into a lot of profit. At one point, I was up over 60% on one of them because we did time the bottom perfect. Our technical analysis worked perfectly. The problem is the market was not as bullish as we would have expected it because we anticipated that the government reopening would have been a major bullish catalyst, but it didn't act like that. And so that bled down into our trading. And so my adjustment that I'm making to my trading right now is the market is not acting like a bull market. It's acting like a bear market. Bullish setups are not going full profit right now. So I need to bring down those take profits if I'm going to long or just even look for shorts. And so for me, we're right at 100. I don't want to short Bitcoin right at 100 because there's probably going to be a big, strong bounce. So I'm just like, I'm going to sit on the fence. That's fine. If I see something like going on the 1 minute chart and we're bouncing around a few $100, then there's possibly different trades there. But as far as longs, Bitcoin is not acting like it's in a bull market. So long setups are not really cooperating very well. And short trades were right above 100,000, so there's really no room to let the trade run because if we drop down to 100, you probably will see some kind of short-term bounce, right? So I'm kind of sitting on my hands. If I see another trade, I will be the first to let you guys know. If I go into a trade, you will know about it. But for now, like I said, both of our trades, we entered right here. We were up 65% at one point, and we also entered right here. We were up 40% at one point. Unfortunately, we were waiting for these trades to go full profit, and they didn't do it because the market is has much more of a bearish tone. And that's something that we really need to pay attention to, is that Bitcoin, I mean, come on. Bitcoin came down here with bullish RSI divergence on most time frames, bounced, and this is the best we get? This is the best we get? Really? We bounced off of 100 and the best we get is a rally to 106? That's not what I'm expecting to see. That's not something I'm expecting to play out very bullish. So that's the first thing, is I'm not so much looking for bullish setups right now, because the market over the last 2 trades that I did have invalidated those setups. The market is not in a position to be accepting bullish setups. So we need to be a lot more careful with those. Number 2, second thing we want to consider is, what do we do if Bitcoin drops below $100,000? Are you prepared for that? What do I mean by that? 1, if Bitcoin drops below $100,000, are you safe? Are you going to get some massive position liquidated that you're not going to want your wife to know about? Are you, by the way, every time I'm in a trade, I'm like, hey, wifey, look at this trade I'm in. I don't hide these things from them. That's called a gambling addiction. I'm sure there's at least one person under the sound of my voice who needed to hear that and repent. Don't screw up your marriage because you're hoping to get a 20x on a leverage trade. Come on now, your marriage is worth more than some money. Okay. Second thing, if Bitcoin drops below $100,000, are you prepared to buy? Are you in a financially stable position where Bitcoin going into a major bear market would actually be a good thing for you? Here's how you do that on your investment account. Either it's completely spot in cold storage and you have cash reserves and income so that you don't need to touch it, so that you can leave it alone for 5, 10, 15, 20 years. Or if you have borrowed to buy the Bitcoin, is the liquidation price on that borrowing so massively low that it make no sense that Bitcoin would even go there during a bear market? I'm talking like $25,000, $30,000. And you have a plan to lower that liquidation price if you need to. Are you in a position to do that? Because what I've seen a lot of people do is they go and they leverage their investment account and they've got a liquidation price at $90,000. That is stupid. STUPID, stupid. Don't do that. If you're going to leverage your account, either 1, do it with debt that is not Bitcoin backed so there is no liquidation. Or 2, you need to keep that liquidation really, really, really low. I understand what you're thinking. Short the dollar, long Bitcoin. Love it. Do that during a bear market. Do that with Bitcoin at least 30% retrace from all-time high. Keep that liquidation price at least 70% retrace from all-time high. Better yet, at least 80% retrace from all-time high. Cool. Let's see. Third thing, I suppose, is we should be looking for short entries right now. Unless Bitcoin has some massive just springboard bottom off of 100K, the overall market sentiment right now is bearish. All right, let's read a little bit of chat and then we're going to keep it going here. Hey guys, if you haven't already, I highly encourage you to check out 2Bit, one of my favorite leverage trading platforms. But once again, I want you guys to be safe. So if you have not already, sign up for 2Bit. This is a great place to do your trades. But and I'll tell you why. It's just, I love the exchange. It's absolutely incredible. They're huge in Asia. They're making a big push into America right now. So if you sign up with the link down below, you're going to get access to all kinds of different benefits for signing up under our link. And we've also got new cool stuff coming for all of our traders over on 2Bit relatively soon. But while I'm talking about this, it is a good time to mention a bit of a teaching. I'm going to teach you a little bit of something about how to actually trade. This one lesson is called Standard Risk, and it will save you so much money. Will save you so much money. Standard risk. Let's say we take a long position. Let's say we're expecting it to go up to 106. Current price is right here. We got our liquidation, our stop loss down below $100,000. I'm going to show you one thing that'll save you so much money. When you set up a long trade, make sure that this stop loss is standardized. What do I mean? If you see the market drop and hit your stop loss, this should be a standard amount of money you lose. Maybe you lose $10. Maybe you lose $50. Maybe you lose $5. This is called standard risk. In a sense, what you are doing when you enter into a trade after you've established yourself as using standard risk is you've established that the cost, the amount of money that you will lose if you go to full stop loss, this is your cost for going into the trade. If your standard risk is $10, then you are saying, I anticipate that I'm going to lose $10 because I took this trade. Am I okay with that? I'm paying $10 for the hope of making, this is a 5.5 risk to reward ratio, for the hope of making $55. Am I willing to pay $10 for the chance of making $55? This is how every single professional and profitable trader in the world does this. There is not one that doesn't do this. You won't find them. You just won't. You will not find a successful trader who does not have some kind of system around standardizing risk. Now, some people will do this. Instead of standardizing around $1, they'll say, I'm going to risk 1% of my portfolio. Okay? So in that case, let's say we have a $10,000 portfolio. 1% of that is $100. That means you have a standard risk, essentially, of $100. It's the same thing. There is standard risk. And the reason for this is that you want to mitigate losses. And ideally, when a trade starts to go profitable, you want to pull that stop loss up to break even as soon as you can to take this off the table. And in a sense, since when you open the trade, you are immediately down $10. Jeff, I'm not immediately down $10. Bitcoin's up 3%. No. Until you've raised the stop loss, you are down $10. That's how you have to think about this, because risk management is how you succeed in trading. Right? This is we were at the hospital all day yesterday and today. Sorry, the last 2 days, Tuesday and Wednesday. When I was in these trades, we were at the hospital or the doctor's office all day. I'm sitting here managing these trades on my phone like a fool. I probably shouldn't have been doing that, but I saw a very strong technical setup. If I had have been doing what I'm teaching you right now, which is raise that stop loss, these trades would have both been profitable because I called the bottom on these perfectly. I mean, we literally entered right here and we entered right here. You see the screenshots over on X. This one was up 65% at the top. This one was up, I think, 35, 40%. If I had to move those stop losses up like I'm telling you and taken the loss off the table, then I'd be break even or I'd have some profit. The reason that these trades didn't pan out was because I was trading while distracted and I was not using the very risk management techniques that I'm telling you. Now, I set them up with stop losses at one risk factor. So I only lost one risk factor, whatever the number is, right? We only lost one risk factor. But still, I should have moved those stop losses up to take profit or even just a little bit profitable. But my point here is that when you are trading, if you don't want to blow up an account, you need to standardize your risk. You need to say, what am I going to pay to go into each trade? For you, it might be that you are extremely confident. You've been trading for years, and you know that you have a 47% win rate, and when you win, you typically get about a 3.5 risk to reward ratio, right? So for every dollar you lose, you make 3.3, you have a 47% win rate. You might say, man, I am so consistently profitable over the last several years that I'm willing to pay $1,000 for every trade, and I might make $4,000 or $5,000 on a trade. That's great. Maybe you're just getting started. You might say, I don't have a lot of money. I don't want to just blow up an account. So what I want to do is I'm going to say I'm going to risk $5 on every trade. Think about it. Are you willing to pay your standard risk to enter into that trade? If you are not, then don't take it. And some of you guys who are just saying, oh, now seems like a good time. I'll liquidate the whole account. We just go all in. Just because our friends over on X do that and they get a lot of engagement doesn't mean that's how you actually succeed as a trader. I don't know if you noticed, but a lot of people get fully liquidated and lose tens of millions of dollars because they are not allowing statistics to work in their favor. You need to make more trades that are smaller. When you dump your entire account into one trade, what ends up happening is you put your entire account on a coin flip. But if you spread your entire account over 100 trades and you're actually a successful and profitable trader, over time the account will grow. Almost invariably, when anybody goes all in on one trade, they will almost always lose all of it. Because your brain is not designed to put hundreds of thousands of dollars on the line in one trade. You can't emotionally handle that. No one can. Successful traders that are worth millions of dollars oftentimes risk between $1,000 and $5,000 per trade, even if they're worth $10 million. But they're making hundreds of trades a year, and they have a 3x risk to reward ratio. When they win, they make 3. When they lose 1, and they've got like a 40% win rate or something. So over time, they are, For every dollar they're losing, they're making $1.7. But that has to show up in the statistics over the course of 100, 200, 300, 400 trades. This is why the people that are the most successful oftentimes are day traders that have a very strict system, and they run that system over and over and over and over and over again. Have you ever heard of high-frequency trading? People doing trading, they're doing like 300 trades a day? That's why, because you build a system that is statistically profitable, and then you have to feed it enough data so that the overarching win rate shows up in the data. It's very important that we think about this the correct way. If you're willing to put the work in to actually learn how to trade profitably, sign up for 2Bit. It's an incredible exchange. Love 2Bit. But if you're just going to go over here and play in the casino, just go to Vegas. It's more fun. I don't like gambling. I've never gambled a day in my life. Literally, I mean, I'm in crypto, so people are gonna be like, "Oh yeah, you've never gambled a day in your life." No, but seriously, I'm in the Venetian. I'm at a 5-star hotel, $500 a night hotel in May. There for the Bitcoin conference. Walking through there, walk right past David Bailey, have a conversation with him, the guy that runs the conference, right? Walking through the casino, you see all these people throwing the. I don't care. I'm like, you know why people gamble? I'm gonna make some of you guys feel real bad right now. There's a couple reasons people gamble. Number one, they find it fun. But you know what they do? They standardize their risk. They say, I'm going to lose $10 on this. They keep it fun. They say, I'm going to bet on the game, but I'm only going to lose $10 if I'm wrong. I'm not going to lose $1,200 freaking dollars because I made a bad bet. Position sizing. That's what that's called. Position sizing. Right? Weren't I just long? Yes, I was. Yeah. And like I said, we just talked about that. Didn't quite go full profit. Oh, well. We're learning. Right? We're always learning. But yeah, you standardize your risk. That's one reason that people gamble. They say, I'm coming here with $50. $50 is nothing to me. I'll go have some fun. Those are people that gamble, and they gamble responsibly. Go have your fun. Go play the slot machines. You're going to lose $1 every time you play. Whatever. Who cares? There's another reason that people gamble, and this is where people get into gambling addictions, and I don't want you guys to get into gambling addictions with trading. And that is where they think to themselves that this is the way that I'm an entrepreneurial spirit. I want to go make a buttload of money because I want to be rich. I want to provide for my family. And so then they go and they gamble all their life savings away. You have to treat this like a business. If you're going to be trading, you have to treat it like a business. And businesses operate based on strong systems. All right. So, let's see. It's Remy No Limit is in chat. What's up? Connor Arthur said, lol, this dude's a moron. Okay. What am I a moron about? Go ahead. Tell me. Tell me in chat. What about what I just said is wrong? Find a hole to poke in what I just said. Tell me right here in front of 600 people. I'd love to hear it. I would love to hear it. Absolutely love to hear whatever I just said that was wrong. Love to hear it. Here's a bet. I'll bet you $20 that you're not going to. Let's see. It's always something or someone or some country dumping crypto. Yep. Leverage traders are reckless now. The market makers are too good at flushing positions. Better to just get into options contracts where wicks can't wreck you. Yeah, those wicks are something else, man. Because I'll tell you what, the only reason that I didn't go full profit on this trade last night, this was relatively frustrating. Because I had a trade set up right here. I was entered like right here. I had a stop loss right here. I had my exit right here. I would have gone full profit on this trade. This was our trade. Got wicked out. That was unfortunate. That was very unfortunate because this trade, I forgot. Actually, I forgot. I did. No, that's right. No, I would have gone full profit on this. Actually, my exit was 103.4. Yeah. Let's see. I might have it up over here. It was a correct trade. The market went where I said it would, but it went and wicked me. And it wicked so fast. Yes, here it is. Look, here's my trade. See? Right here. This was our exit. We said, you know what? Because I adjusted and said, okay, it doesn't seem like we're going as far as I thought. We're stopping out the 0.618. I'll put my stop right here at the 0.618. So I put my exit right here, 103.4. Got wicked out. That sucked. That was like, are you serious? Are you kidding me? And I was going to go back into the trade, but by the time I noticed that it got wicked out, because this was more of a longer term trade, I mean, we were in it for several hours. By the time I noticed that it got wicked out, we were in the emergency room at the time. My wife was getting some blood work done, which all came back clean, by the way. It was already it was already like up here, and it was no longer a profitable risk reward setup, so I couldn't go into it. So that is something that you have to consider talking about. Imagine listening to this hillbilly. Haha, I knew it. You owe me $20. We're talking about gambling, right? I said, tell me what I just said that was wrong. Won't tell me. Called me a hillbilly. Here's the joke. The joke's on you. I am totally a hillbilly. I was born in Appalachia, my friend. That is not an offensive statement to me. I am from the land where Dolly Parton is the queen, Gatlinburg, Tennessee. I don't care. I do not give two craps what you think. If you have a valid criticism, feel free to tell me. But doesn't seem like he can come up with it. Poor guy, just embarrassing himself on the internet. Good deal. Good deal. Say let's read chat. Talks for another 20 minutes instead. Yep, got me there. Let's actually read chat. Let's actually read chat. Got me there. Bedrock present. Leverage trading is so scary for a very volatile market like crypto. Once again, that's where we need to use standard risk. I am interested. I am interested in this. I don't know. That is interesting. Let's look at this. Let's see if we can find a way to make this. Interesting. I don't know. It's tempting to take a long here. But again, I follow rules, and there's a lot of times I do not go into a trade that I think is going to actually work because it doesn't fit my rule set. One of my rule sets is I do not go into a trade unless the original setup is at least a 3-to-1 risk to reward ratio. So for me, I would have to see Bitcoin drop down here to. Ugh. Yeah, I'm tempted to pull a long here, but it's got to fit my rules. And right now, these bounces are only bouncing up to the 0.618, so I don't think I can justify a long here. I want to. Like, emotionally, I want to. Emotionally, it's exciting to see Bitcoin down this much, and it probably will chart a path upwards here. But according to my rules, I don't know that I see a good entry here. I just can't figure out how to make the things work here, because we might bounce up here to the 0.618, 102.6, but I'd have to pull my stop loss down here below this local bottom because the likelihood of us falling over and hitting a double bottom is pretty high. So what I will do in this case is say there's a possibility we could bounce here, but I'm only going to go into this trade if I can get a really low entry. So this is where a limit order might come into play. Get a high risk to reward ratio. Let's see. What other indicators do you use? I use a lot of very basic indicators. A lot of just price action, honestly. I've been looking at the charts for a very long time. Only been patient since early 2021, Jeb. Yeah, well then you're probably up pretty good. Yeah, it's tempting to pull along here because that does kind of look like it's slowing down the reversal, the drop. But at the moment, I can't be confident enough. We need to make sure we're only going into high confidence trades. If you start picking all these like B tier, C tier trades, like this is interesting to me. Like a bounce up towards these trend lines. It's very interesting. But I'd say this is like where we are right now, like a C tier trade. If we drop down here to below 101, that's where this setup might make sense. That's where this setup right here might make sense, partially just because the risk to reward factor is so high. But yeah, I'm not really convinced yet. So we'll keep an eye on it. This has fallen over a great deal. It is interesting. It is interesting. I'm trying to think if it'd be useful to put like a limit order, limit entry down here and try and catch something. I don't know. I'm going to think about that while we read chat. Connor Arthur, 30x long. There you go. Connor, if you need someone to talk to, let me know. That's so sweet. It's true. No, I mean, seriously, guys. There are people out here that are just acting a fool, and the reason they're acting a fool, and Connor's probably one of them, is they need help. And I don't mean they need help like, oh, you need to go to a therapist. No, I mean they need some love, and they don't have it in their life. And what they need is people to show them the love of Jesus Christ. Now, sometimes people also do need to be called out for their foolishness. So, like, showing the love of Jesus Christ doesn't mean that you just, don't call people out on them being silly. But people do need some love. So show some love in chat to our haters of the day. Everybody can pour out your haterade. Still going to love you. Won't call you a fool if you're being a fool, but I love you. And I care about you and want you to succeed. All right, now Bitcoin's dropping down into a range where pulling along actually makes some sense. Partially because we've also got, now with this reversal, a big fat fair value gap, FVG right here. What's the 3-minute chart show? It's tempting. It's tempting. We're going to bounce. I might end up pulling this long if we bounce here. I'm going to set up on my other screen the trade. This might actually work. Let's see. Oops. Let's set up the trade on our other screen. This might work. Where's our stop? My goodness, get over here. My goodness, get over here. I'm going to pull an entry. Yeah, I'm going to enter. I don't know. It might not pan out, but it is a really well optimized entry. So, but again, I'm actually going to use probably half a risk factor on this trade just because I'm so unconfident in Bitcoin right now. 100, 586. 100, 586. I'm going to do a smaller trade. Yeah. Only risking half a risk factor on this trade because I am, as I said earlier, not as confident. 102, 600, 102, 600. Yeah, so that's a 4-to-1 risk-to-reward ratio. So in the trade now, I don't know. I'm going to try it. I'm more so doing this for the sake of not even profiting, just to kind of get some more information. Because I will tell you one thing that's very helpful when trading is that you really get a strong feel for what the market feels like. Because when you put skin in the game, you can really kind of feel it, right? So if Bitcoin starts going profitable here, I'm anticipating that Bitcoin's going to rally up here into that fair value gap. If it does, if it starts breaching above 101.4, that's where I will raise the stop loss to break even. Pull up our charting on this software over here too. I don't like the way that downtrend looks over there. Ooh, yeah, I don't like that. That's interesting. That's another perspective on how to draw that downtrend. We might, since I only entered with half a risk factor, I might ladder into it a little bit if we drop lower, but I'm not gonna go any higher than one risk factor. So I've left a little bit of powder on the table that I can enter into the trade with. But yes, so let's go ahead and make this a little easy for you guys to see. We entered into the trade right here. Let's see. Trying to catch something. It's moving against us right now. We entered in at 109.83 with half a risk factor. Because as I said, we have a bearish bias. That said, Bitcoin has really just dumped off a cliff here. So, and there's that fair value gap above us. So that's our entry. Our exit is, pull that up, 105.86. And then entry right here, entry price is 109.83. Yep. So that's the current setup. Like I said, moving against us. I am capable of adding a little bit to the position if I want to give it more room to breathe. Because it is possible that we see a lower low here and build RSI divergence on the minute chart. That's possible. I am tempted to give myself a little bit more room to breathe with the other half of the entry, with the other half of the capital that I would typically use for a trade. I think I'm going to do that. I'm going to go ahead and let this be a full-size trade for what I would normally do. We'll try it. This is the, like I said, when you are trading correctly, you are paying the risk factor. I just assume whenever I go into a trade, according to my standards, that whatever money I am standing to risk is just lost. I'm just assuming it's gone, right? Just assuming that it's gone. So now we're up to 0.9 R. I have a little bit of powder I could add if I wanted to. But I'm just assuming that that is gone. And that's okay. If it's gone, I'm willing to lose what I've just put into this trade for the chance to see what happens. And honestly, I trade with small amounts a lot of times because it also helps me to understand the market sentiment. When you have money in the market, when you have actual skin in the game, it helps you to get a feel for what the market's doing. You just get a better feel for what the market is doing. So right now, this is set up as a 4.55 risk to reward ratio trade. That is well within my range. I like to see that. I could even move. In fact, instead of deploying more capital, what I'm going to do is I'm going to spread out that stop loss a little bit, which will bring me to 1R. So I can put my stop loss as low as 100,550. So I'm going to give it a little bit more room to breathe. If it stops out, that's fine. Yeah. So drop that stop loss a little bit. Pretty good chance we'll get stopped out here. But that's okay. That's something that we're willing to take. All right. Where's the stop loss? Right now, we've got our stop loss down here at 100,550. And that's fine. I am going to give this a 70% chance. I'm going to give this a 70% chance that we get stopped out. So, Jeb, why did you take the trade if you're giving it a 70% chance you're going to get stopped out? Well, the reason I took the trade, even though I'm going to give it a 70% chance we're going to get stopped out, is because I'm going to make $4 for every dollar I lose if the trade actually turns around and goes profitable. So now we're break even. See this? We're break even. Let's see. Yeah, we're break even. We're up 0.5%. Let's see. Bitcoin might be trying to find a bottom here. And so, dude, this is the way I think about it. I'm going to give myself, as a trader, I'm going to say, whatever R is, this is your, like, trading budget. You just budget for yourself trade. Let's say R, like I said, for a lot of people, R might be $10. Give yourself a budget. Say, I'm going to give myself 30 R per month as a budget. Okay, that means that you're giving yourself a budget for trading of R times 30 equals, in this case, $300. Maybe your trading budget is $300, 30R. You're willing to risk 30R. That's how much you're willing to risk. Now, if you make profitable trades, then that pays into this account of R. All goes back to R. R, you mateys. Are you a good trader or not, yeah? R. Give yourself a budget and say, I am only allowed to lose this much R. Okay? If you make a big trade, then great. That fills up the account. But you end up putting a stop for yourself and say, every month I'm only willing to risk this many R. Maybe it's 50 R. Maybe your R factor is $5 and you're willing to risk 100 R a month. Well, at that point, sorry, that was times 30. Maybe you're willing to risk 100 R, but R is 50. So you're willing to lose up to $500 a month. That means $500 a month times 12 equals you're willing to lose $6,000 a year trading. You understand? Like, this is how you standardize You have to put systems in place or you will lose. Even if you put standards in place, there's still a good chance you're going to lose. But when you start to think to yourself, okay, I have a budget. This is how many trades I'm allowed to enter. This is how much I'm allowed to lose in a month. Then you start thinking to yourself, wow, I really need to be very selective about where I place these trades because I only have so many trades I can take per month. And when you do, you start getting good trades. You start having a higher probability that you're going to get good trades. Now, this trade is moving in our direction now. We're up 3%. We're up 0.25 R at the moment. The next thing I'm going to do with this trade is I am going to say, when do I bring the stop loss to break even? Because one of the first things I'm looking for when I enter into a trade is to bring the stop loss to break even. One of the first things I'm looking for, and I like that candle, one of the first things I'm doing is I'm looking for how to bring the stop loss to break even. Is Jeff not working with Lux Algo anymore? No, we are. And in fact, let's take a look at what Lux Algo says. So there you go. Look at that. Lux Algo is showing us that we're rejecting off of the trend catcher. We'll see if we can hold it. We'll see if we can break above it. That'd be nice. That little green candle on the hour chart is very, very handy. So, and also, what I'm learning from recent trades is that we need to move that stop loss up quicker, and we need to potentially bring down that take profit a little bit sooner. So the main thing we're going to want to do there is bring that stop loss up quicker. So right now we're about at break even. It's too early to move the stop loss up now, but we will try to do it sometime soon if Bitcoin moves in our direction. And if we get stopped out, that's okay. Like I said, we have a monthly budget for how many R we're allowed to lose. And since you will only ever lose 1 R in a trade, you're not going to blow through your whole budget in one trade. You're going to want to give yourself at least 30 to 50 R. 30 to 50 R every month, because you have to give yourself enough trades that you're allowed to take so that you can start showing whether you are statistically profitable or not. You can't just have one trade blow you up for the month. You need to have minimum 30 to 50 R. If you don't have minimum 30 to 50 R, what's going to happen? Let's say you only give yourself 5 R that you can lose every month. It's very common to go on a 5-trade losing streak. You understand what I mean? It's very common to lose 5 trades in a row. Happens all the time. Happens all the time to me in trading. Happens all the time to me in backtesting. And if that blows up your account, you're screwed. So you need to have at least 30 to 50 trades that you're allowed to take every month in your budget, in your trading budget. How many trades are you allowed to take? At least 30 to 50. Because that's when you start seeing statistical probabilities work themselves out in the numbers. So if you are willing, so you can kind of back extrapolate it, say, I'm willing to lose $400 a month trading. I'm willing to take enough trades to lose $400 and not make a single penny and lose all of that. I'm willing to do that, which is the price I'm going to pay to get into the market. Okay, then break that down. You want at least 30 to 50. Okay, let's say you want 50 trades. You want to be able to do at least 50 trades a month. You want to be able to spend $400. Divide those out. Maybe your R factor is going to be $8. You can lose $8 50 times to hit your budget. If you lose every single trade in the month, which probably won't happen, but it might, you can do that. And then from there, that's when you are able to determine what R is. You have to figure out what R is for you. And as you become profitable, that number will probably move up. If you're consistently very unprofitable, eventually you might want to move that number down, right? If there's something broken in your strategy, then you want to stop or keep that number low. For me, if I'm having a bad month or something, I don't want to bring that number down to 0 because I want to continue getting experience in the game. But I might bring it down a lot, might bring it down a whole lot. So I'm not the most happy with this trade right now. Bitcoin's trying to catch a bottom here, but I'm really not feeling it. I am going to go ahead and let it run. I've budgeted for myself to be willing to lose this trade because at some point we're going to catch a trade here and we're going to make 7R, right? And it's going to make up for losses. So it's okay to take a loss. In fact, as I've said, something that you have to get used to as a trader is kind of like when you're in sales. Most of your trades are going to be losers. It's extraordinarily uncommon for someone, let's see. I will say I may stop myself out of this trade early. Ugh. We dropped that back down to the 0.786. If it starts falling below this, I may stop out early and only lose half an R. Just because it's trying to hold the 0.786. The fact that it had to even go back down to the 0.786 tells me that this might be a failed bounce already. And I don't know if I need to wait for it to go make a new low for me to learn that. That's what I'm gonna do. I think what I'm going to do here is I'm going to watch and see if we hold this. If we do, then we'll let it run. But I think I'm actually gonna watch this on the minute chart, and we might stop out of this trade early. So we only lose half an hour. Because you don't want to have if you don't need yeah, I'm gonna flash close that. Okay, so let's see, what did we end up losing? I think we ended up losing about a third of an R. That's going to, and the reason I did that is because that is most likely going to go down to our stop loss. Okay, so we lost 0.4 R. This is probably, at this point, because it broke through that Fibonacci, it's probably going to drop down there. Yeah. This is more likely than not going to drop down to the stop loss. So if it's going to drop down to the stop loss anyway, you can see we're kind of cascading below 0.786 now. If it's going to drop down to the stop loss anyway, I'm not going to sit here and just watch it happen. I might, and there you go. We would have been fully stopped out. Liquidity grab just went as full stopped out. Because we got out of that trade early, we lost 0.4 R. But if I hadn't have done that, literally 30 seconds later, we would have lost 1 R. Right? You see how important it is to be watching these trades. You see that? It got stopped out. Went right down to the stop loss. And now this is where I would actually be looking for a new entry. Because what just happened is it pulled a clean liquidity grab off of everybody who was in the trade that I was just in. Liquidated everybody. I got out early because I could see the writing on the wall. The 0.786 was failing. The fact that we had to go down to the 0.786 was bad news in and of itself. But now we got bullish RSI divergence. Right? So we only lost 0.4 R. These little statistical differences between losing 0.4 R versus losing 1 R are what make you a profitable or an unprofitable trader. It is tempting to long here, but now that we've kind of broken the structure, we have to go through and redo our analysis. It is tempting to go long here. Am I willing to try that? Spinning top? I am. I am willing to try that. I'm willing to try that. We only lost 0.4 R, so I can be a little bit more aggressive. I'm going to try it. Because we are trying to find a bottom down here. So yeah, I'm going to go long. We lost 0.4 R. Let's get some TPSL set up over here. I am willing to give it a shot. As I did last time, went in with half the trade. Actually, with less than that. We're going to put a very tight stop loss here. I'm not willing to risk even a full R right now. And I'm literally just going to target where we just were. I don't like this setup quite as much. Rejection off of that. See what happens when the minute closes. Okay. Couple of spinning tops. Yeah. Just trying to fall over. I'm going to close that. We're trying to find that bottom. So we lost 0.1 R. So far on both of those trades, because we got out quickly when it doesn't look like it's going in our direction, we lost 0.5 R. We took 2 trades, and because we used proper risk management, instead of losing minus 2 R, only lost 0.5 R. These trades are not moving in our direction. So I'm going to take a break because I'm going to try and focus on the stream here while we wrap it out. But there is probably a good long entry around here somewhere. And the question is going to be, where do we find it? Right? At some point, this trend will likely reverse. But at this point in time, it looks like Bitcoin might want to grind down to 100,000, which is why we're going to go ahead and go right back to what we're talking about, which is that daily bias, which is very much bearish. As far as short's concerned, we could short here. I'm just, Let's see. Where's your volume indicators, brah? You can see the volume. It's right there. I can see it. I mean, I can pull it up for you if you want, but I knew that there were big volume candles there. It's very obvious. Let's see. All right. Are we coming to an end with these low dips? Bitcoin's going to probably pull a bounce off of 100K, but it's going to take time. It's going to take time. As I said, overall, my prediction is that Bitcoin is probably going to drop back down to 94,000. Jeb, we dropped below the 200 MA on the 1 hour and the 15 minute. The shorts are in play for the rest of the day. Yep, that does kind of look like what it is. Like I said, the long entries are not panning out right now, which is fine. You know, that's just the way it goes. At some point, there will be a bounce, and we can keep hunting for that. But at this point, we've only lost a tiny little bit, like not even more than half an hour. But you know, it's the market clearly is not really sure what it's doing, so we're going to wait for more of a uptrend confirmation before we get too excited. All right, hope you guys have enjoyed today's video. Hey, Jeb, when you're up 75, 90%, want to set a new stop loss to secure gains. Any suggestions? After you get past an important technical zone, so that might be, you know, bouncing above a local high that happened recently, whatever. You want to bring that stop loss up. You know, you got your trade set up. You want to bring that stop loss up to break even. And then as you break through another zone, you want to bring it up to, you know, a little bit in profit. In general, you want to allow your trades to run, and part of the way you can allow them to run is by you manage the stop losses. All right, guys. Yep. Well, hey, if you guys are interested, I highly encourage you, if you haven't already, to make sure to check out itrustcapital.com. And the reason that you should is because you're going to want to take everything that you are earning in the cryptocurrency market, and you're going to want to throw it straight into long-term investment. See, one of the most important things that you will ever do in crypto is put money into Bitcoin and hold it for the long term. If you put money into Bitcoin and you hold it for the long term, you're probably going to be fine. But what you need to do is you need to make sure that you're doing it in a tax advantage way. So when you sign up for iTrust Capital, by going to itrustcapital.com/crypto-jeb, then you will be getting access to retirement accounts that allow you to buy Bitcoin spot. I want you to go ahead and make your iTrust Capital account right now so that when the new year starts and you have funds available again, because you've probably already maxed out your Roth IRA, at least some of you guys have, then you will be able to do so again. The tax advantages for investing in Bitcoin and cryptocurrencies through a retirement account are enormous. So if you haven't already, make sure that you sign up for iTrust Capital with the link in the description box down below. All right. Like I said, it looks like Bitcoin's trying to find its bottom here. It's trying to do an overside-underside test. Lots of volume, which I like to see. Yeah. Hey guys, also make sure to check out Stampseed if you haven't already. Stampseed is a phenomenal product. Stampseed is an absolutely phenomenal product because you are going to be able to stamp your seed phrase into titanium. A lot of you guys are over here. You're like, oh, I'm cold storage Bitcoin, but you have your Bitcoin seed phrases written down on a sheet of paper. Like, seriously, stamp them into titanium. Use Stampseed. Links down below. Now we got something. Now I like to see it. Okay, so what I'm going to do here is I'm going to wait for more confirmation. I want to see, because this is an overside underside test off of this downtrend, but the problem is Bitcoin might be rejecting off of this level. If Bitcoin, it's got the volume. If Bitcoin with volume can break through this level, that's where it might start, you know, trending to the upside. And we've got, you know, we're fine with actually that's very responsible risk management. Thank you, Jeb. Yeah, exactly. How much volume is enough to push to the upside? So if we have a high volume moment going on here. If we start to see volume breakout above that flat level there, that's where we may consider a long. I like what I'm seeing so far, but we're waiting for a breakout. So we can start kind of painting what a possible entry would look like. We would be targeting right up here. Definitely not entering anything here until we see some kind of, that'd be too tight of a stop loss. No, I don't like it. I don't like the long setup here. I'm going to throw it away. I don't like it. It might work out. Eventually, it's probably going to rally, but honestly, like a lot of you guys are saying, this is more so an area where we'd want to be looking for shorts. It just, yeah. I mean, we could, a short right there. It's probably going to print some. It's just very difficult because Bitcoin's already so far into this trend. Yeah, we'll wait. If we get a strong uptrend, then that's where we'll go into that. But anyway, guys, I hope you enjoyed today's stream. If you did, make sure to hit that like button, subscribe to the channel. There are a lot, of great pieces of content coming your way here on the Crypto Jeb YouTube channel. So stay tuned for all of that. A revisit back down to $100,000 might be in the cards. If it does, once again, these are excellent opportunities to be looking for longs. I hope you guys enjoyed today's video. If you did, make sure to hit that like button, subscribe to the channel, stay tuned. And if Bitcoin does drop significantly, don't fret. It's not the end of the world. Bitcoin's going to be fine. Just try and hang in there and don't freak out too much. Hope you guys enjoyed the content. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.